Yes, good morning, students. Bharti, can you hear me? Hello, Bharti. Bharti, are you there in the class?
Yes, ma'am. Good morning, ma'am.
Good morning. Shall we start, ma?
Yeah, ma'am.
Okay. So we'll continue with the yesterday's topic where we have started up with the second unit for you, that is financial institutions and economic development. So yesterday we have learned the aspects of what is finance, what is the role played by finance, and what is the importance of financial system in the country, how the structure of the financial system is being designed, and what are the various aspects or methods of running the financial system in the country. Now, today we are going to learn one of the most important aspect of the financial system, that is, as we have learned yesterday, financial system of a country is classified into four broad segments. One is financial institutions, the other one is financial markets, then followed by financial instruments and financial services. So today we are going to look into what are those financial institutions through which the the country is able to make their strategic plans for overall economic development of the country. Now, before we look into what are the various financial institutions, let us learn certain basic aspects of it, that is new capital formation in the country. Why this capital formation is required and what is the meaning of this capital formation. Yesterday we have learned about it, but still again we'll go through a little glance on this. Why this capital formation is required? What is this capital formation meaning? So basically the capital formation is a process involved where a series of production of various capital goods will take place. That means the country will be busy engaged in formation or process of building up a capital stock for the country, so that you will get a product which is further used for manufacturing of certain other products in the country. In other words, it involves making of more capital goods such as machines, such as factories, such as tools, and certain instruments which we can use them for further production. Are you able to follow?
Yes, ma'am.
Yes, you please look at this pictorial presentation. The capital formation, if you observe, capital formation starts with generation of savings. The basic motto of financial system, what we learned is to see that the savers and the investors to be met at one particular place. That means to make a connection between savers and investors. So this generation of the savings is the first or the initial aspect of the financial system. And the same thing for capital formation. If you want to manufacture a machine, if you want to manufacture what do you call or if you want to set up a factory or if you want to go with any kind of instrument or a machinery or a tool that is further used in production process, you require the capital in a huge amount and a long term capital requirement ఉంటుంది. So when you require that long term capital, obviously you need to depend upon the financial institutions or banks or certain other instruments which are engaged in lending of these long-term finance. Now for that, how the country is going to be encouraged, how the individuals are encouraged is with the help of their savings. See, once we motivate them to save, automatically that savings will be converted as loans, and that will be lended as a capital loan for the industrialist or any business unit. So generation of savings is the first one, and motivation of savings. How will you mobilize the savings? That is, banks will attract the customers or the individuals or the savers by paying them a higher rate of interest and at an attractive rate of interest. If a good rate of interest is given, then no, an individual will get motivated, and that is how the savings are being mobilized. And not only the banks, post office accounts are there, financial institutions are there, which are continuously working on encouraging and motivating the individuals by giving them an attractive interest package. So that is how the savings are mobilized. And once the savings are mobilized, then that amount, whatever has been deposited in the banks in the form of various savings account, that will be utilized for the purpose of lending in the form of loan to various business units or to various business entrepreneurs. And this is what the investment avenue is. Now, whatever the money that has been taken as a loan, that will be used for startups, and these startups will lead to closure of incumbents. What is this incumbent stands for? Actually, this incumbent is one where the government or the country has to focus in making certain improvements. And there are certain business units which are sick, or కొన్ని startup companies ఉంటాయి which are discouraged, which are running in losses. So some improvement, some change has to be brought in them. That step is taken by banks or financial institutions, and which are totally sick, which cannot be modified, will be closed. Others will be given certain what you call push up hand for improvement. Then this may lead to improved competitiveness. So when banks and financial institutions are coming forward to lend loans in short term and long term purposes, then many of the individuals will get motivated, and they come forward and they start up their own business units. That is how the competitiveness will increase in the country. And this ultimately leading to growth. How it is leading to growth? When more number of business units are set up, that number of units, that means whenever they are coming up with any new product, any new business idea, a new product is coming into the market. When any new product is coming into the market, it is a sign of growth and development, isn't it? Do you agree with this?
Yes, ma'am.
Yes. So this is about the concept of capital formation. Then we look into the another continuous aspect, that is financial intermediation. Financial intermediation. Now, as I said, whenever the class is going on, please make the habit of taking running notes in the class. Okay. If you have any queries, you can raise the doubts. Now, we'll move on to the another topic, that is financial intermediation. This is the basic objective or the work of financial system in the country. That is, it is a practice of linking an investor and borrower. That means a party or an organization or an institution will be acting as a mediator, and they will be mobilizing the savings from the individuals. Whatever the savings that have been mobilized in the form of deposits to the bank, that will be lent to the needy people for the further growth and development of the country. So this financial mediation means it can be a bank. That means an institution which is acting as a mediator between the borrower and the investor. That means a saver and the investor. Now, in other words, it refers to an institution that acts as middleman between the two parties. Just the basic information you need to learn on this. Who are these financial intermediaries? It can be, yesterday we learned in the financial system charter. What is that? It can be a bank, it can be a financial institution, it can be a mutual fund, it can be a pension fund, it can be a post office, any institution that is engaged in mobilizing the savings. That means they will collect the money from the public in the form of savings. Whatever the money they have collected in the form of savings, that will be lent to the business people or entrepreneurs or investors for the purpose of investing them in various business aspects. That is, it can be investment in a new manufacturing company, it can be starting up a new business unit in the country, or it can be investment in shares, investment in bonds, investment in any kind of securities that are leading in the market. So this is the basic work of the banks and financial institutions. Such process, you call it as financial intermediation. Intermediation in the sense acting as a mediator. Who are the wings that are acting here? It can be a bank, it can be an institution, it can be a development bank, it can be a commercial bank, it can be mutual fund organization, UTI, Unit Trust of India, it can be insurance company, LIC, life insurance companies, general insurance companies. All these institutions and organizations are working as middlemen. So that process where you are converting your savings into investments, and the one who is engaged in linking up, అంటే సేవర్స్ ఎక్కడ ఉంటారు, ఇన్వెస్టర్స్ ఎక్కడ ఉంటారు, వీళ్ళిద్దరిని కనెక్ట్ చేసి where a link is being created between them, such an institute you call it as, or such a process you call it as financial intermediation. Am I clear?
Yes, ma'am.
You can take down this chart if required, ma. That is, from the savers, the money will be moved to the financial intermediaries. Banks avvachu, financial institutions avvachu, it can be a stock exchange, anybody which is acting as a middleman, and they will be giving or lending in the form of long term loans, short term loans, medium term loans, like with the various schemes ఉన్నాయి ఇప్పుడు, ముద్రా లోన్స్ అని, ప్రధాన్ మంత్రి రోజ్గార్ యోజన అని, and any other agriculture sector if they require, this amount will be loaned for will be lent in the form of loan for various investors. This is how the process of financial intermediation is. Now, the another important aspect of financial system is development banks. Okay. Development banks are the financial institutions which are engaged in the process of, as the name suggests, as the name resembles, development banks. That means it is a bank which is engaged in the process of performing certain development activities in the country. This is what you need to understand with the title of this banks. Development banks are basically, these are the banks which are engaged in the further development. I mean, they engage in lending of loans at a subsidized interest rate. That means at a lower rate of interest, they are encouraging the individuals to set up various what do you call, business units, or to make improvement in the existing business units. And their basic purpose is to focus on infrastructural development. They lend loans for huge projects which are involved in the development of the country, like it can be a metro project, it can be construction of dams, it can be development of any infrastructural facilities, laying of roads, it can be construction of MNCs, or supplying the machineries to the factories and all. If any entrepreneur require loan for these kind of developments, such long-term projects will be taken care by these development banks. And the credit goes to development banks is they are lending the loans, what do you call, at various maturity levels. That means you can take a loan for a period of 1 year to 20 to 25 years. That means the tenure of the repayment of the loan varies from 1 year to 25 to 30 years also. That means they are engaged in lending of loans in both the ways, both for short-term purpose as well as for long-term purpose. If any agriculturists require loans for the purchase of seeds, pesticides, fertilizers, development banks are encouraging them and lending the loans at a lower rate of interest. At the same time, if any of the industrialists require loan for further development aspects, ఒక మెట్రో ప్రాజెక్ట్ చేయాలి, లేకపోతే ఏదైనా రైల్వే ప్రాజెక్ట్ ఉంది, లేకపోతే ఏదైనా what do you call aeronautical projects is there, for them if they require loan in long term purpose, then these development banks are encouraging them by giving them loans at a lower rate of interest and at different maturity levels. And tenure ఎక్కువ ఇస్తే they will get enough time, sufficient time to repay their loans. This is how the development banks are working. And the boom for development bank has started after post independence, that is World War II has given rise to the aspect of development banking. And the first development bank in our country has been set up on the name of IFCI, Industrial Finance Corporation of India. Please take down, make a note of it, everybody. The first development bank in our country is Industrial Finance Corporation of India, which was established in the year of 1948. Am I clear with the introduction?
Yes, ma'am.
Now, let's move to further steps. Objectives of development banks. What are the things that what are the objectives with which the development banks have been initiated in the country? Yesterday, in the last class, we have already learned how the sequence of establishment of banks have taken place, how the agriculture sector has given rise to commercial banks system in the country, how the commercial banks has led to the development banks, followed by financial institutions and other things. The sequence we have studied. Now we will look into what is the basic objective of setting up this development banks. You can take down this chart so that you can follow the content very clearly. Now, as I said, providing funds is the basic objective. That means a bank means its basic function is accepting the deposits from the public and lending the loans. This is the primary function of any bank. Now, as a development bank, its major function is providing funds, both the short-term funds, medium-term funds, and long-term funds, and various purposes at different maturity levels. At different tenures, they are encouraging the individuals, investors, savers in lending the loans. Then the other objective followed by providing funds is infrastructural facilities. As I stated that the primary motto of this development banks is to focus or promote infrastructural development in the country. That is focus on major project areas which require funds in a large scale and which lead to the overall economic development of the country. Construction of buildings or construction of new projects in the country, or any kind of what do you call irrigation, electricity department projects, development of irrigation facilities in the country, development of roadways, railways, airways. All these are infrastructural projects. So the development banks focus mainly on lending loans for these infrastructural projects. And the other objective of this development banks is employment generation. Now you may ask, madam, how come they are leading to development, what do you call employment generation? Now when a new bank is set up, you require human resources to work in it, and you require employees. Now, as we have observed that the sequence of banks, how the progress of banks have taken place, how the establishment of banks was increasing day by day, and how strongly the financial system is developing in the country. Now, when more number of banks are established, you require more number of people to work at different designations, at different levels, at different branches. So that means directly or indirectly, the development banks are leading to employment generation in the country. By setting up of more and more branches, more and more banks, it is giving a source of income to the unemployed. So all these unemployed will be engaged at different levels, at different positions in these development banks. So it is creating, that way it is creating the employment opportunities to the unemployed in the country. Is this clear? Is this point clear?
Yes, ma'am.
Then the other one is promotional activities. Promotional activities. Now, development banks also work on promotional aspects. Now, what is this promotional? Promotional aspects means you can take the example of certain services. Actually, as a bank, it can limit itself only with two things. That is, accepting the deposits and lending the loans. But nowadays, if you observe, banks are not limiting themselves only to the basic function of banking. అంటే ఏదో డిపాజిట్స్ తీసుకోవడం, లోన్స్ ఇవ్వడం మటుకే వాళ్ళు ఉండట్లేదు. They are also engaged in various promotional activities. That is, suppose if an individual is looking to buy a house or a new home, then what do you call, this home loans will be lent, encouraging them to take home loans at a lower rate of interest with a higher maturity tenures. And so that more number of people will come forward, they'll get encouraged, they'll be promoted to buy a new house. And apart from this, many other services like online trading is being facilitated, where you can make the payments through the UPI and what do you call this internet facilities. Through the online banking, you can promote your transactions. You can make the payment of electricity bills, payment of water bills. You can pay your income tax. All these are the additional services that the banks are rendering and promoting in the country. So, and apart from this, banks nowadays, they are also engaged in another trending promotional activity, that is CSR activity under. CSR activity under corporate social responsibility. So that means whatever the funds they are generating, they are encouraging the, that means from their end, they are doing something beyond expectations. That means they are coming into the society, serving the society with what do you call, various programs, various training activities have been initiated by the banks to promote education and to see to it that more number of people are got educated in the country. They gain knowledge out of this. So that is how the promotional work is being taken place. The another one is planned development. Plan development, this is, as we have studied in the last class, how the 5 years plans have been designed and what were the objectives of these 5-year plans. Whatever it is overall development of agriculture sector, industrial sector, and education sector, infrastructure development. All this is covered under the planned development of this development banks. So this is how the development banks are working with a strong objective of building a good financial system in the country. Now, if you look into what are the various development banks that are there in our country, development banks in India, you can take out this figure, ma.
Okay, ma'am.
Development banks in India are classified into 4 categories: industrial development banks, agriculture development banks, export and import banks, housing development banks. That means if you observe, the development banks are focusing, as I said, economic development is the primary goal of the financial system. How the economic development is possible? Only when all sectors are equally balanced in the country. అంటే మేము బ్యాంక్ కదా, మా పని ఓన్లీ సేవింగ్స్ ఎంకరేజ్ చేయడం లేదంటే లోన్స్ ఇవ్వడం అనే కాకుండా దే హ్యావ్ స్ప్రెడ్ దేర్ యాక్టివిటీస్ ఇంటూ వేరియస్ సెక్టర్స్. Industrial sector ki spread ayyaru, agriculture sectors they are working, foreign exchange they are encouraging. That's what I said. Housing development banks are also set up to encourage individuals to buy their own home loan, to buy their own have a dream home by helping them or supporting them with the home loans. So you take down this structure. Later we'll go deep into each of this aspect. Industrial Development Bank is the first category. Then we learn about agriculture development banks. Under the Industrial Development Bank, we have IFCI, IDBI, SIDBI, and even there are few more also. ICICI is also can be added because initially it was a development bank. Later on, it was been working as a purely commercial bank right now. Okay. Now, under the Agriculture Development Bank, we have NABARD, and under Export and Import Development Banks, we have Exim Bank, which is engaged in foreign trade, which is engaged in encouragement of foreign trade in the country. Then the 4th category, we have Housing Development Banks. Did you take the chart? Shall I move to the next step?
Yes,
Okay,
ma'am.
ma'am.
Are you all following?
Yes, ma'am.
Okay. Now, before we learn the various aspects of various types of development banks, first of all, let us have an understanding on why do you need a development bank in the country. Already manaku commercial banks unnai mana country lo. Commercial banks are actually initially they have been set up to support the agriculture sector in the country. Agriculture sector ki loans ivvadaniki basically the commercial banks have been set up. Of course, they have later extended their services to the industrial sector and other aspects also. Now, when commercial banks, there are so many commercial banks which are running in our country, working very strongly supporting the financial system. Then why do you need a development bank separately? Do we really require? Means, yes, the question is yes. We are in need of development banking in our country. Why? You can just look at the points. You can take down the running notes while I'm explaining. So here, if you look at these points, stimulating and improving small-scale sectors in India. As our country is majorly occupied with rural areas, ante villages ekku nai mana country lo, rural areas are more, literacy rate is less. That means larger portion of our population is under the illiterate segment and in rural areas, and still certain areas which are underdeveloped. For them, there is no source of income. Most of them, majority of them are still standing on unemployment zone. So to support them, to protect them, we require a special bank which which primarily focus on improving the small scale industries in the country. Small scale industries ante khadi industries avvachu, weaving business avvachu, and what do you call, that are engaged in what do you call, garments business, or very small scale units, cotton industries, cotton business units avvachu. To encourage them, textile sector avvachu, to encourage them, the development banks are required, because commercial banks are engaged in multiple aspects. They may not focus particularly on the small scale industries. So to give a boost up to the small scale industries, we require development banks in our country. And to undertake the development of the housing sector, this point already we discussed. Financially facilitating large scale industries, this also we have discussed. Assisting agriculture sector and rural India. Increase the volume of foreign trade in the country. Reviewing and revising sick industrial units. What is this sick unit? Sick unit means a unit which is running in losses since a long period of time, or a unit whose liabilities are more than their assets, or a unit which is unable to what do you call, restructure their operations. And it is a business unit only, adoka small scale industry, కానీ దానికి strong financial support లేకపోవడం వల్ల it has become weak, or it has become sick, or it may not have the strong human resources, good managers లేరు ఆ కంపెనీకి. It may be called as a sick unit. So such sick units will be taken care. వాళ్ళ ప్రాబ్లమ్ స్టడీ చేసి వాళ్ళ రిక్వైర్మెంట్స్ ని ఫుల్ఫిల్ చేయడానికి you require a development bank here. Then another aspect is to contribute in the growth of capital markets. This already we have studied, how the banks are coming forward to support the capital market in our country. So basically to focus on these what do you call, major areas, we require establishment of development banks in the country. Now we go to what are the various types of development banks. As we have studied in the above chart, the development banks are classified into 4 segments here: industrial development bank, agriculture, export and import bank, and housing development bank. So first we'll start with industrial development banks. The first industrial development bank in our country is being set up on the name of IFCI, Industrial Finance Corporation of India, established in July 1948. It was started with an objective of providing financial assistance to small scale industries and even the large scale industries at a subsidized interest rates. And it has been working on various aspects of providing funds, both on medium term, small scale terms, and this is what do you call, this is the first industrial development bank which has been initiated to provide long-term and long-term financial assistance to the industrial sector. They also work on providing the financial assistance at the medium scale and long scale credit, and basically they are engaged in what do you call, their main focus is on infrastructure development. That is, as I said, the development bank objective is to develop the infrastructural projects like the shipping industry avachchu, it can be a mining industry, it can be what do you call a hotel industry, or it can be any electricity generation, or generation, that is what, generation of power, or it can be any eligible financial assistance. Any unit, any industrial unit that is engaged in development of any infrastructural project, the IFCI is coming forward to support them financially, both in medium term and long term aspects. Then the other bank is Industrial Development Bank of India, IDBI. Now, IDBI is being set up. Actually, this is called as the Apex Bank in the country. Apex Bank means this is the bank which controls other development banks in the country. That means it is heading the other financial banks or the development banks which are set up in our country. And the IDBI was set up in the year of 1964 with an objective of providing long-term and the medium-term financial assistance to the industrial sector. Actually, initially, this IDBI was set up as SIDBI, Small Industries Development Bank of India, in the this IDBI was set up as it was set up in 1964. Later, it has been what do you call, been started focusing on the small industries development, and the name has been converted as SIDBI. That is, in 1976, Small Industries Development Bank of India has also set up. Now, the basic objective of this bank is to promote the financial assistance to the industrial sector. Whatever the bank you are taking, I mean, their functions and their objectives are one and the same. One is to provide the financial assistance to the industrial sector, and to render these financial assistance at medium term tenures or at long term tenures. This is about IDBI, that is Industrial Development Bank of India, and we'll move on to the next one. Exim Bank, we'll move on to the NABARD, National Agriculture Bank for Rural Development. This is one of the main and the important agriculture banks set up in our country, that is National Bank for Agriculture Rural Development, NABARD, is the primary development bank in the country, which has been established to support agriculture sector. Their primary what do you call, their primary focus is development of agriculture sector. It might be what do you call, lending of loans for the purpose for the purchase of machinery which is required for agriculture development. It can be purchase of tractors, it can be purchase of ploughing machines, or it can be for the purpose of what do you call, installing borewells in the agriculture sector, or providing any kind of irrigation support to the agriculture sector, or it can be for the purchase of seeds, fertilizers, pesticides. Now, a farmer An agriculture farmer generally depends upon the weather conditions earlier, initially. And it was very hard and difficult for them to install or set up bore wells and to spend their money on these, what do you call, costly pesticides and all. So they never used to get these qualitative pesticides from the market. So this has uh, been moved by the government to set up an exclusive bank which is primarily focusing and working for the agriculture sectors on the name of NABARD, that is National Bank for Agriculture and Rural Development. Now it has been set up in the year 1982 on 12th July, primarily focusing on the farming sectors. It can be it equally focus on dairy farms and cottage industries, small and village handicrafts industries, weaving sector. All these establishment, their what do you call, their development growth, they require any kind of financial assistance at a subsidiary rate of interest. The loans will be lent to them and they will be encouraged to repay at different tenure levels, so that the farmer should not feel burdensome while repayment of loan. Such kind of encouragement is being given by the NABARD exclusively for the agriculture sector and the village industries. Am I clear with this?
Yes, ma'am.
Since we have lot of things to cover up, I'm just I'm not going very deeper into the aspects. Okay. If any other notes required that I'll be sharing to you, you can just go through those points. Fine. Now we'll go with the another development bank, that is Exim Bank, the Export and Import Bank, which has been created by Export and Import Bank of India Act 1981. Now, basically, it is a public sector unit which has been set up with an objective of giving financial assistance to Indian exports that are engaged, or Indian business units that are engaged in foreign exchange trade. That means it helps or it supports financial assistance in the form of loans to the business units that are engaged in foreign trade. This is actually, this Exim Bank is a, as I said, it is a public sector unit. It is actually owned by the government of India to promote the foreign trade in our country. Then we will move on to the next one, that is Housing Development Bank. We have National Housing Development Bank. As I said you in the introduction of Development Bank, that development banks are being set up for the overall economic development of the country. Their primary motive is to encourage overall development in the country. That means to focus or to, what do you call, to have a balanced focus on all sectors. Now, if you observe, the development banks were focusing on the industrial sector, agriculture sector, foreign trade, and finally with the housing development banks. Now, as the importance or growing need for home loans have increased, development banks have initiated setting up of a national housing bank. You call it as NHB. This NHB is a, again, government owned bank which is established as per the Act of National Housing Bank Act 1987. It was actually set up on 8th July 1988 for regulating and refinancing social housing activities in the country. That means they are not only encouraging the housing development aspects, but they also focus on lending loans for various research projects that are engaged in the housing activities here. That is the one who is engaged in doing real estate business, or if you observe, there are many huge projects which are taken by what you call various real estate owners. Like you have Saket Constructions, Aparna Constructions aithe it is leading in Hyderabad, where they require huge, and ఆ కన్స్ట్రక్షన్ అయిపోయాక దట్ ఫ్లాట్స్ హ్యాస్ టు సోల్డ్ అవుట్, then the real owners of that land will be able to get the money back. But till then it is very difficult for them, because it requires huge amount or a large scale amount of investment on such housing projects. So this National Housing Bank is going to encourage those real estate investors or such kind of projects by providing them financial assistance on their needy basis from time to time with an easy repayable tenure. This is how the national housing banks are working here. Hope I am clear with the development bank's explanation. All
Yes,
the four
ma'am.
segments.
Yes, ma'am.
Are you taking the running notes on this?
Yeah, ma'am.
Fine. Now, as we have studied in a financial system, that financial system of the country is segmented into financial institutions, financial markets, instruments, and services. Now, under financial institutions, we have completed one aspect, that is development bank. Now we'll move on to the another aspect under financial institutions, that is commercial banks in the country. Commercial banks in the country. Now, what actually the commercial bank is? As a commercial bank has been set up with the primary objective of development in the agriculture sector. To develop the agriculture sector, that is because agriculture sector is the primary sector of our country. That means the primary or the major source of income is being generated to our country. Majority of our national income is being generated through the agriculture sector, which is called as predominant sector in our country. To encourage them, to provide them financial assistance as per their requirements and needs, the commercial banks have set up. Actually, the objective asal commercial banks start in the agriculture sector ni encourage cheyadaniki. But later, the services have been spread to industrial sector and different sectors of the economy. And now, if you observe the present working style of commercial banks, అసలు కమర్షియల్ బ్యాంక్ చేయని పని అంటూ ఏది లేదు ఇవాళ. Any kind of loan, any kind of financial assistance, any kind of support you require, everything will be taken care by the commercial banks in the country. That means our financial system has strengthened in that way, that is where the commercial banks have spread their activities to the overall development of the economy. అంటే ఇది చేస్తాము ఇది చెయ్యము ఆర్ కమర్షియల్ బ్యాంక్ వెళ్తే ఈ పని అవ్వదు అనేది ఉండదు. దే విల్ డీల్ ఇన్ ఆల్ సార్ట్ ఆఫ్ యాక్టివిటీస్ in the country. So this is how the commercial banks have been initiated to set up. Now they basically perform two basic things. A commercial bank is one which is basically engaged in performing two basic functions, which is accepting deposits from the public and advancing the loans. Now, as the title of the bank itself is indicating that commercial bank means a bank that is commercial in nature. Commercial means which is always working for a profit motive. The objective of this commercial bank is to earn profit or to make money. This is the basic objective of what do you call this commercial bank. That is how they have been called with the name as they are very commercial in nature. That means they are very profit seeking institutions. They do business to with an objective of making money from their business activities. No. Now, let us learn what are the functions of commercial banks here. If you look at the functions of commercial bank, they are basically categorized into two types. One is
Primary and
primary
secondary.
function, the other one is the secondary function.
Secondary.
Now, the primary function is where it performs two types of activities in the first step. What are they? The primary function is, can you look at this, Mark? You are
Yes,
able
ma'am.
to look at this? What is the primary function? Accepting deposits and advancing
Advancing.
loans. Now let us learn one by one. Accepting deposits and advancing loans. We will look into the first duty or their first function, accepting of deposits. Why the banks are accepting deposits? What is the purpose? If the banks are not encouraging the individuals by paying them attractive, what do you call, interest rates on their deposits, no individual will come forward or no individual will get a zeal or motivation to save. Yes or no? That's what we studied even in a previous class also. Yes or no? Do you all agree with this?
Yes.
If there is no interest rates లేవు అంటే అట్రాక్టివ్ ఇంట్రెస్ట్ రేట్స్ లేదు అంటే జనాలు అసలు ముందుకు రారు అంటే డబ్బులు పెట్టడానికి. వై డు వి కమ్ టు బ్యాంక్? వి విల్ గో అండ్ కీప్ అవర్ మనీ సమ్వేర్ ఎల్స్ ఆర్ సింప్లీ వి విల్ కీప్ అవర్ మనీ ఇన్ అవర్ safe lockers. And another reason why people are coming forward is because they may not have the scope of security for their money at their own lockers. అది కూడా ఒక రీజనే. Most of us will try to keep our money. We feel so, so relaxed if we keep our money in a bank instead of keeping them at our home, because we feel that it is a more secured place. అది కూడా ఒక reason. That means that is also one of the reason why people have been encouraged, are getting motivated to come forward and keep their money in the form of deposits. Okatemo interest rates, because they are getting good interest rate. If we keep that money at our home or somewhere else, we cannot what do you call, we cannot make any business on that, or we cannot gain any profit on that. And second reason is it is a secured place to keep. If you keep your money in the bank means it is understood that your money is safe with them. So with these two intentions, the people are or individuals are coming forward to save the money in the form of deposits in these commercial banks. And to encourage them, the deposits are accepted by banks in various forms. That means there are various types of deposit accounts which are encouraging the individuals to get motivated to keep their money in this bank. Now let us learn what are the various types of accounts. If you look at these types of deposits account, they are classified into four categories: savings account, current account, fixed deposit account, and recurring deposit account. Recurring deposits, you call them as RDs. Now, Coming to the first one, savings account. Savings account is the basic type of a deposit account which does not have any restrictions, neither on the what do you call deposits nor on the withdrawals. That means when and where you require, without having any restrictions on the what do you call time limit, you can deposit your money and you can withdraw your money. That means savings account is the most convenient account to an individual to do their transactions, even on a daily motto also. Every day we are making lot of transactions from our savings account through UPIs అని online transactions అని చేస్తున్నాం. So the most convenient account is the savings account, which does not have any time restrictions for withdrawals or deposits. And at the same time, this is a kind of account on which very nominal or very low rate of interest have been paid to the customers, because ఎన్ని రోజులు మనీ ఉంచుతామో తెలీదు, ఎప్పుడు తీస్తామో తెలీదు, అండ్ ఆల్ ద టైమ్ ద ట్రాన్సాక్షన్స్ కీప్ ఆన్ going on from these accounts. Banks do not what do you call do not come forward to pay higher rate of interest on these savings account. So they do pay a basic percentage of interest for them. Generally it is 8 to 8.5%, not more than that, to encourage that nominal amount is to encourage that savings from the customers. This is any individual, any person, as it is actually a category of personal account. They can operate and they can make the transactions through this savings account. ఇప్పుడు సెకండ్ కేటగిరీ వచ్చేసి కరెంట్ అకౌంట్ you have. Now, this current account is facilitated to the business units, especially the businessmen who are engaged in daily transactions. As a business unit, whether it can be a restaurant, whether it can be a textile showroom, or whether it can be what do you call any kind of electronic showroom or anything which is engaged in daily business transactions, they do open this current account. And this current account will what do you call will not have even major restrictions for the withdrawals and the deposits here. And this is exclusively taken up for the what do you call by business people to make the transactions convenient through this. Then if you look at the third one, that is fixed deposit account. Fixed deposit, as the name itself is resembling, it is a type of deposits where you have a fixed tenure. That means once you deposit your money, you cannot withdraw as and when you require, because there is a fixed time period for this, where it can be a period of 1 year, 2 years, 5 years, like this. The tenure keeps changing, even depending upon the banks nowadays. Few banks, they may allow you for a period of 6 months, or it might be for a period of 5 years, 8 years, like that. Depending upon the tenure, they keep changing. But as and when you require, you cannot withdraw the money from this. Once your money is deposited in this, you have to keep them for a fixed period of time. And to encourage this fixed deposits, banks are generally what they do is they pay a attractive and a higher rate of interest to customers, higher rate of interest to customers. Generally for fixed deposit what we do is ఒకేసారి ఒక lump sum amount మనం bank లో deposit చేసేసి we'll fix the period and the interest amount will be what do you call paid on that fixed amount that will be deposited to your account, or you can withdraw the interest amount, or you can keep that amount and keep recurring in the same account for a longer period of time. This is what about the fixed deposit accounts. Inka fourth category vachesi you have recurring deposits account. Now recurring deposit account is one, this actually these are called as RDs. This facility is available even with commercial banks and even with post office also. Post office lo kuda you will have a recurring deposit account. And the importance of this recurring deposit account ante you are going to fix your money for a certain time period, but uh, you have a facility of depositing your money on a monthly basis. అంటే ఒకేసారి ఫిక్స్డ్ డిపాజిట్ లో ఏంటి ఒకేసారి ఒక లంసమ్ అమౌంట్ తీసుకెళ్లి డిపాజిట్ చేస్తాం ఫర్ ఎ ఫిక్స్డ్ టైం పీరియడ్ వరకు నీకు దాన్ని విత్డ్రా చేసే ఆప్షన్ ఉండదు. కానీ రికరింగ్ డిపాజిట్ ఏంటి అంటే recurring deposit also, it is also works on time basis. You are going to fix the time period of your deposits for a certain period of time, but the convenience is you need not to deposit the money for a longer period of, I mean at a time oka lump sum amount ఒకేసారి ఫిక్స్ చేయకుండా మంత్లీ బేసిస్ లో వేసుకోవచ్చు. That facility is being given for the recurring deposits accounts. And post office lo aithe it will start with rupees 500 rupees to start avutundi every month on the name of your siblings, on the name of your parents, on the name of you, on the name of your children. You can open RD accounts, you can deposit, you can start your deposits monthly 500 eskuntavo, monthly 1000 eskuntavo, it's your wish. But at the time of withdrawal will have a fixed period ఉంటుంది. It can be some post office RDs అయితే I think it is for 5 years. 5 years. And in some banks actually these RDs have been relaxed for 2 years, 3 years also. So basing upon certain nature of the commercial banks, it keeps changing. This is what about the recurring deposits. Am I clear with this? Any doubts?
Ma'am, can you explain again recurring deposit?
రికరింగ్ డిపాజిట్స్ అంటే నువ్వు ఒకేసారి అమౌంట్ డిపాజిట్ చేయము, కానీ డిపాజిట్ ఇప్పుడు నువ్వు మంత్లీ బేసిస్ లో సేవ్ చేసుకుంటావు, బట్
I do not understand.
you cannot deposit, you cannot what do you call, there is no hard and fast rule of depositing the money in this recurring deposit account. Understand? You need not to deposit your amount in lump sum basis at a time, just like fixed deposit. Generally for fixed deposit what we do, we will deposit the amounts once for all. That amount we will deposit for a fixed period of time. You are going to gain the interest on that amount. You will, once your tenure is completed, you can withdraw. But in recurring deposit, this is also the withdrawal restriction is there, but the deposit restriction is not there. That means you will fix your deposit for a fixed period of time, but you need not to deposit the money at a time, only once. You can deposit the money on a monthly basis, quarterly basis, half yearly basis, but the withdrawal will have a restriction. You can withdraw only after certain period of time, not as and when you require. That means partially it is acting like a savings account and partially it is acting like a fixed deposit account. At the time of depositing, relaxation is there. At the time of withdrawal, you cannot withdraw. You can withdraw only after the completion of the fixed period of time. Am I clear?
Yes, ma'am. Thank you.
And on recurring deposits also, you will get a good rate of interest, but not more than the fixed deposit. Comparatively with all types of deposit accounts, fixed accounts will have a higher interest rate, followed by the recurring deposits and savings account. Okay. Now, this is about under primary functions, we have two functions. One is accepting deposits, and the second category is advancing of loans. Now, under the advancing of loans, there are various methods of various types of loans which have been facilitated as per the convenience and the comfort of the customers. If you look at the first category, we have term loans here. Please, all of you mute your phones. I am getting disturbance here. Whenever you want to convey anything or you have any queries, you can unmute them and talk to me. Now, term loans. Now, term loans are categorized into three types. Generally, banks will lend the loans in three segments, that is short-term loans, medium-term loans, and long-term loans. If you look at the short-term loans, these loans are generally rendered for a period with a maturity of less than 1 year. That means you will take a loan, but the repayment period will be less than 1 year. You need to repay the loan within a shorter period of time. Generally, for any emergency requirements, whether in a business unit or in your personal this thing, these kind of loans are encouraged for a short-term basis on for the small purchases or purchase of any durable goods. Just like if you want to buy the a refrigerator, any electronic goods, we will go for a EMI loaning system. They are being granted only for a short period of time with a repayment period of not more than 1 year. That covers under the short-term loans here. Then the second category we have is medium-term loans. Medium-term loans are generally preferred to be taken by agricultural farmers or small-scale business units or small industries for their working capital requirements. Not exactly working capital, but to meet their business requirements in a short-term basis. Suppose if an agriculture farmer wants to buy a tractor, okay, we cannot give them a loan which is repayable after 25 years or for a period of 25 years. That will be a huge tenure for them. At the same time, we cannot tell them to repay within 1 year. Both are not suitable. So for them, for such kind of activities or for such kind of transactions, we encourage them by lending them on a medium scale basis, which have a maximum repayment period of 3 to 5 years, more than 1 year, but less than. Few banks are working for 3 years, and few banks they will work for 5 years of tenure. So it is more than 1 year. Basically, the division of term loans are based on repayment period, tenure of repayment. Less than 1 year, if it is less than 1 year, short term. More than 1 year, 1 year to 3 years or 5 years, it is medium term category. Above 5 years, it is long term category. Now, medium-term loans generally preferred to be taken by small-scale business units to open new branches, to expand their business, or to expand their business line and all. They generally prefer to go for medium-term loan, which can be repayable within 3 to 5 years. And the third category is long-term loans. These are generally taken by industrial units. Very rare case of agriculture, industrial units and the business units which are engaged in shipping business, aeronautical business, mining, iron and steel companies, and power generation industries. They all prefer to take long-term loans which have a what do you call repayment period of 25 years. Generally, because the loan period is high, the interest rate is also not much will be charged on the long-term loans. It will be comparatively lesser on these long-term loans. Hope I'm clear with the term loans.
Yes, ma'am.
Now, the another kind of loan which the banks deal is cash credit system. Cash credit. You please take down the running note of this. Now, cash credit is a what do you call? Is a short-term loan given by the banks for the purpose of meeting working capital requirements of the business. Working capital requirements. What is working capital? Can any one of you? You are all familiar with financial
Start a
accounting
business.
and all. You might have done
Yes, ma'am.
problems on working capital, calculation of working capital, management accounting. Can you please tell me, any one of you, what do you mean by working capital? Yes, Bharati, Sarah.
Ma'am.
చెప్పమ్మా వర్కింగ్ క్యాపిటల్ అంటే ఏంటి?
Start with capital.
Start with capital. No. Working capital means this is the amount which is required for any business unit to run their day-to-day business operations. Every day, they will have some expenditure in their business to purchase some stationery, to pay the rent of the building, to pay the salaries, or to meet any emergency expenditure every day, not emergency, every day to run your business operations. Whatever the amount that is required for your business, you call it as working capital. And cash credit is one of the loan which is given or lent by the banks to fulfill the working capital requirements of the small scale business units. వాళ్ళ వర్కింగ్ క్యాపిటల్ రిక్వైర్మెంట్స్ ఫుల్ఫిల్ చేయడానికి ఇచ్చే లోన్స్ నే యూ కాల్ ఇట్ యాజ్ క్యాష్ క్రెడిట్. అండ్ జనరల్లీ most of the what do you call business units, they prefer to take the cash credit because that is instead of taking the loan from outside, or instead of falling into the what do you call lot of outstanding liabilities and all, they prefer to go with the cash credit system because it is, first of all, it is a very short period repayment will be there. Second thing, comparatively lesser rate of interest than that is being charged on the overdrafts. I'll also explain you what is overdraft, but meanwhile remember that whatever the interest that is charged on other loans, the interest which we are going to pay on the cash credit is comparatively lesser. So most of the business units, they prefer to go with the cash credit system. Generally, the repayment period will be 1 year, or sometimes it is extended to 3 years in few of the banks. This is the facility which is being given to the business units in our banking system. Okay. Then the third category of loaning is overdraft. Overdraft. That means you can overdraw the amount that is there in your account. Suppose Sarah is having some 70,000 in her current account. Sarah is running a beauty parlor. She is having some 70,000 in her current account. but she is a regular customer to the bank and she makes everyday transactions with the bank. So you are tied up. You are tied up with or you have an account with one particular bank where you are doing your everyday business transactions with that bank. Now, in an emergency, you need to issue a check for 1 lakh rupees. But imagine that you have only 75,000 in your account. But what is the check you need to issue for? What is the amount of check?
70,000.
1 lakh. You have
1
only
lakh.
75,000 in your account, but the check which you need to issue in your business account is you
1
need to
lakh.
issue a check of 1 lakh.
1
So
lakh.
you need how much extra now? You need
30,000.
30,000 more.
Yes, ma'am.
You tried your hard efforts but could not. Then you approached the banker to give a facility of overdraft where you can withdraw more than that is there in your account. Actually, only 75,000 is there in Sarah account, but she can be allowed to withdraw this 1 lakh rupees. The check can be passed favoredly without any issue. How come it is then? Why this facility is being given is because you are a regular customer to the bank. You have lot of connections and everyday transactions have been taken up with that particular bank. So banker does not want to lose customers like you, and to encourage you, to support you in your urgent requirements, banks will encourage you to do this. And generally, that means how much extra you have withdrawn now, Sarah? 25,000 extra. Now, to repay this
30,000.
25,000 extra, that means 75,000 was already there in your account. You have given a check for 1 lakh. That means 25,000 extra you have been given. So that 25,000 extra you need to repay back within a short period of time. Generally, 45 days of time will be given for repayment. So on that overdraft, you have to repay within a period of 1 month or 45 days. And another benefit is your interest will be charged only on the extra amount withdrawn. That is, interest is charged for that 45 days only on that 25,000 rupees, but not on total 1 lakh. So instead of getting a loan, instead of taking the loan from outsiders or from friends or somebody else seeking help from them, you can take the support of your bank where you have a current account and you can resolve this issue. So this is a kind of facility which is given by the banks to their regular customers, which is called as overdraft facility. Am I clear?
Yes,
Yes,
ma'am.
ma'am.
Okay. Now, apart from this, there are certain other loans which the banks are encouraging nowadays, like education loans, you have the, what do you call, personal loans, which are repayable within a period of 5 years, education loans for abroad education, for higher studies of the students. They all come under the category of development project loans or the loans which are repayable within a period of 5 years. So like this, the primary function of commercial bank is accepting the deposits and advancing the loans. Am I clear?
Yes, ma'am.
Now we'll move on to the secondary functions. These are they are not called as functions as because they are called as the services. Secondary functions are regarded as services which the banks are doing to make comfort of their customers. You can have a look at this. The secondary functions involve general utility services and agency services. Agency services and general utility services. First, we'll look at the agency services and then move to the general utility services. What is this agency services? As you are the regular customer of a bank, you are maintaining account with them. Bank will always respect you. They try to honor you in various aspects, and they always try to keep you in a comfort zone. So collection and payment of rent, interest and dividend on behalf of you. Bank will act as an agent to collect the rents, to make the payment of your rents or interest or any kind of dividend on behalf of the customer. Collection and payment of checks and any kinds of bills. Buying and selling of securities. Securities means it can be a share, it can be a bond, it can be any kind of what do you call security that is involved in financial aspects. So on behalf of you, bank will do this works for you. Payment of insurance premium and subscription. Yes. How they are paying, you might wonder, madam, how they are paid. Will they come collect from us? And no. Amount will be there in the our account. You know the EMI system?
Yes, ma'am.
Yes. How the EMI will be deducted every month. Suppose if I have taken a home loan, my EMI will be deducted to that bank from where I have taken a loan, from the bank where I have an account. That means the bank where I have an account is supporting me to do the transactions for that particular purpose. So this category covers as the agency services of the banks. Okay. That is payment of bills, honoring of checks, payment of buying and selling of securities. They all fall under the category of agency functions of the bank. Next category is general utility services. Now, apart from this, they will be working on what are these general utility services. The main advantage we get with this is locker facility. Suppose you have gold ornaments or any other important documents that you need to keep them safe, where you feel them insecure keeping at your home, then such kind of facility is given by the banks, where you can take a locker by paying the locker rent on a prompt basis. You can deposit your, you can keep your gold ornaments, you can keep your documents in those lockers. This is one facility, locker facility is given. Second thing, to make our transactions convenient, banks are encouraging us or serving us by providing ATM card, where you need to travel to the, you need not to travel to the branch. You can go to the nearest ATM, you can withdraw the cash. And credit card facility, where you don't have an amount in it, but you will be facilitated to give the credit for a certain period of time. Debit card facilities, credit card facilities, issue of demand drafts, travelers checks. Traveler check whenever you are going on a tours or outstations, instead of carrying money, you can carry the traveler's check, which is more comfortable and secure for you. And internet and mobile banking facilities, and purchase and sale of foreign exchange currency, they all will be, and transfer of funds, facilitating of transfer of funds. These all are the other, what do you call, extra or additional services that are rendered by the banks to encourage the customers. Am I clear with this?
Yes, ma'am.
Yes. Now we look into what are the types of commercial banks. You will have a short glance of it. The commercial banks are classified into three categories: public banks, private bank, and foreign bank. Now let us learn each of them. What is a public bank? A public bank is one where major shareholding portion is being taken by the government. That means more than 51% of shares. Major portion means it should be more than half. That is mandatory. More than 51%. It can be 60%, 75% majority. Majority of the shares are holded by the what do you call by the central bank and by the concerned state banks. Such bank which is running as per the regulations and norms of the central government or by the central bank, you call it as a public bank here. Now the second category is private bank. It is a bank where major portion of the shareholdings or share capital is held by private individuals or private businessmen is going to run these banks. That is the private banks. Majority of the, though it is a private or public bank, it should act as per the norms of the central bank only. Remember, though the central bank may not have any share or very less share in private banks, though it is a private bank or a public bank, it should act as per the norms of RBI only. The regulatory authority for all this is the Reserve Bank of India only. Now, the third category of bank is the foreign bank. Now, foreign banks are generally, these are called as international banks, which are set up or registered in foreign currencies, foreign countries, and they may have their branches in our country also. It is not mandatory for them to operate there only. Their registration office, their headquarters, their establishment will be done in a foreign country, but they may run in, you can take the example of HSBC, you can take the example of Bank of America. These are all from all called as foreign banks only. Their establishment, their registration will be in a foreign country, but they will be setting up their branches, running their business activities in our country. So these are the three types of commercial banks: public bank, private bank, and foreign bank. Am I clear?
Yes, ma'am.
Yes, ma'am.
Now, let us learn the another important aspect of financial institutions in our country. We have studied two segments, ma. Under financial institutions, we are done with development banks, we are done with commercial banks. Now we'll come to the another segment of financial institution, that is NBFCs. NBFCs, non-banking finance companies. Now, non-banking finance companies, they are called as bank, but they are all equally called as non-bank. Why it is so? A non-banking company is a company, means it is registered as per the Indian Companies Act of 1956. It is a company, but it is also called as bank. Non-banking finance company. That means it is going to act or perform certain functions of the bank, but it is not a bank at all. Such a bank, you call it as non-banking finance company. That means this company is engaged. This company is engaged in lending of advances or loans to various business sectors. And they also, their primary work is acquisition of shares on behalf of customers or on behalf of companies. They are engaged in purchase of securities like shares, bonds, debentures, any other securities issued by the government or any local authorities. So their basic work is to engage in lending aspects. This way, they're going to lend the loans to all the industrial sector. Just like short term loans are there, you have medium scale loans and large scale loans. Long term loans you have. This is what the basic difference. You can just understand the difference between a bank and a non-banking finance companies. Now, these non-banking finance companies, they do not accept the deposits. Remember, they are engaged in carrying on the financial activities, but they do not involve in accepting of deposits. Whereas if you observe the banks, their primary function was accepting the deposits and advancing of loans. And in banking system, we have the check facility, but we do not have such kind of check facilities with the non-banking finance companies. Since it is a company, it is going to act as per the Indian Companies Act regulations only. Indian Companies Act of 1956 regulations only. Whereas all banks are going to work as per the Banking Regulation Act and under the control of central bank, that is the Reserve Bank of India. Now, what is the role that is being played by non-banking finance companies? Actually, I think we are done with the time.
Yes, ma'am.
Yes, ma'am.
Then we'll stop here for today. It's 11:30. Probably your next class faculty might be waiting. We'll continue in the next class. Okay. More one more topic is there. By that, we are going to wind up with the block 1 syllabus for you. Fine. So in our next class, once we'll finish off the block 1 and then we'll continue with the block 2 aspects. Hope I am clear with all the topics in this.
Yes, ma'am.
Yes.
Thank you so much.
Fine. Thank you.
Thank you.